This trading platform is one that's proven to be divisive in recent years. Robinhood stock has been on a strong general uptrend this year. The trading platform provider has seen impressive results in recent quarters, something investors hope will continue. Other recent innovations could provide strong growth over time, but this is a stock that does come with significant risk. Let's dive in. Robinhood stock analysis. Is Robinhood a buy, sell, or hold? Welcome to Timely Investment Research. Robinhood stock has made a nice comeback this year as investors bet on the company's business model. Robinhood simplifies investing in stocks and cryptocurrencies online. In March, it had 23.6 million funded customers and $80.9 billion in trading volume, a 41% increase from last year. The platform's cryptocurrency trading increased by 86% to reach $6.5 billion. If these numbers can continue, there's certainly a lot to like about this stock's potential. Of course, this is among the most closely watched growth stocks that also carries significant risk. Let's try to square these two ideas and dive into whether this stock is a buy, sell, or hold. Interest income and Robinhood stock. In February, Robinhood surprised investors with a profitable fourth quarter. Strong results were driven by increased interest income and trading activity. Shares surged 10% after the announcement, benefiting from higher interest rates. The company reported robust revenue growth in 2024, driven by increased net deposits, rising gold adoption, and market share gains. Robinhood now aims for margin expansion, expecting a stable to slightly increased headcount this year. Analysts also expect a 1-cent net loss, despite the company recently posting a 3-cent per share profit. Interestingly, Robinhood's recent growth has been driven by increased margin investing. This has allowed the company to lend eligible customers money for securities, but is a strategy that also carries risk. Net revenue increased from $167 million to $236 million in the past year. Transaction-based revenues, driven by crypto trends, saw impressive growth. But as mentioned, these catalysts are certainly ones to put in the higher risk bucket. Despite seeing a 4% decline in monthly active users, the company also saw over 23% increase in average revenue per user. Overall, the numbers are pointing in the right direction, and that's why Robinhood stock is up significantly this year. Fintech innovation at its finest. After being in the market for over 10 years, Robinhood aims to democratize the finance sector with more accessible and affordable investing options. The company introduced zero-commission trading and popularized fractional shares, prompting changes in brokerage models. However, Robinhood has seen some slow engagement in investing and received backlash for promoting impulsive investing moves. Last year, Robinhood generated $1.9 billion in revenue despite facing hurdles. That said, the company did struggle with profits, reporting over $500 million loss for the year. Although customer growth was crawling, funded customers saw a 1.7% increase from the previous year. Robinhood stock is not for the faint heart. For investors who want low-risk investments in finance, Robinhood stock could be a bet that's not worth making. This company is expected to have significant volatility, which may deter some investors. That's understandable and a reality that isn't likely to change moving forward. That said, there is something to Robinhood's core business model that remains attractive to many long-term investors. Unlike traditional brokers, Robinhood attracts younger investors, positioning it for future growth as these investors accumulate wealth. Analysts have pointed out Robinhood's relatively tiny share of U.S. self-directed assets, but significant share of self-directed brokerage accounts. Investing in Robinhood might be challenging, especially for risk-averse investors or Bitcoin critics. However, those willing to tolerate volatility may see growth, given Robinhood's appeal to younger clients with growing wealth. I'm going to put Robinhood in the cautious buy category for now, but only for investors who have the risk tolerance to ride out the volatility with this stock moving forward. Thanks for spending some time with us today, Timely Investment Research. We're so glad you did. If you found value in today's video, please give us a like, hit that bell icon to never miss an upload, and hey, don't forget to subscribe.